All right, let's get right into it. We're talking about Tesla, probably the most debated stock on the planet right now. The big question is that insane valuation a bubble waiting to pop, or are we just getting in early on a company that's about to change, well, everything? Let's break it down. So let's just start with this number, $1.62 trillion. That's Tesla's market cap as we're wrapping up 2025. That puts it in the top 10 most valuable companies in the entire world. I mean, think about that for a second. That is a mind-boggling number for any company. But for a company that right now mostly just sells cars, it's just on another level. And yeah, that number is really the heart of the whole debate, isn't it? Is that $1.6 trillion price tag totally out of touch with what the company is actually doing today? Or are the people buying the stock just seeing something the rest of us don't? Are they just early to a party that's going to be powered by AI, robots, and a whole new energy grid? Let's dig into the numbers and see what they tell us. Okay, so before we get into all the future stuff, let's get our feet on the ground. What does Tesla's business look like right now in 2025? Let's take a quick snapshot. Okay, so here are the latest numbers from their last quarter. And you got to look at the details here, because that's where the story is. Total revenue, up 12%. Not bad, right? But hold on. Look at the automotive revenue. That's their main business. It only grew by 6%. The real powerhouse, surprisingly, was their energy division, which shot up by a massive 44%. And vehicle deliveries, yeah, it's a record. But the growth has really slowed down. It's just up 2% from last year. And this chart really tells the story of that slowing growth. So they delivered a record number of cars, right? But how'd they do it? Price cuts. And the result is that the actual money they made from selling cars this year is actually down 9% from 2024. They're selling more cars but making less money on them. That is a really, really important piece of the puzzle here. So what's the big picture of Tesla's business today? Well, it's steady, it's not falling apart, and that energy business is definitely a highlight. But the days of just explosive, off-the-charts growth in their main car business, those seem to be on pause for now. You've got more competition, and people just aren't buying EVs as fast as they used to. All right, so with all that in mind, let's look at the first side of the argument, the bear case. This is the view that says, hey, maybe this thing's a bubble. And when you look at Tesla based on today's numbers, well, it gets a little wild. And you don't have to look far to find people who think so. Michael Burry, the guy from The Big Short, he didn't mince words. He just flat out called it ridiculously overvalued. And for the bears, this isn't just some gut feeling. They say pretty much every traditional financial yardstick backs them up. I mean, just take a look at this. This is the PE ratio. It's basically how much you're willing to pay for a dollar of the company's profit. So for an old school car company like GM or Toyota, you pay about 10, maybe 15 bucks. Totally normal. But for Tesla, you're paying $337 for that same $1 of profit. It's not just in a different ballpark. It's playing a completely different sport. And if you think that's wild, it gets even crazier. There's this super standard financial model called a discounted cash flow. Basically, you try to predict all the money a company's going to make in the future and figure out what that's worth today. When analysts run that model on Tesla, they come to the conclusion that the stock is overvalued by a whopping 85%. Let me say that again, 85%. Based on its current business, its fair price would be just a fraction of what it is today. And the list of worries for the bears doesn't stop there. They'll point out that shareholders get diluted every single year from stock compensation. They'll bring up that slowing EV market we just talked about. They'll point to the fact that competitors like BYD and Ford are really starting to eat into their market share. And of course, they'll remind you that Tesla has a bit of a reputation for being late on its biggest promises, like full self-driving and the Cybertruck. Okay, wow, that's a pretty strong argument that this thing is a bubble, right? But there's a completely different way to look at this company. So now let's flip the coin and look at the bull case. And this one isn't about today's numbers at all. It's about a bet on the future. Here's the whole idea in a nutshell. The bulls will tell you, forget the car company metrics. They don't matter. They say looking at Tesla's car sales to value it is like trying to value Amazon back in 2001 by just looking at how many books it sold. The argument is that you're not buying a car company at all. You're buying an AI and robotics company that, for now, just happens to be funding its research by selling cars. And what does that AI and robotics future look like? Well, it's built on these huge game-changing ideas. First, the Robotaxi network, right? A fleet of self-driving cars that could operate like Uber, but with way higher profits.
Then there's Optimus, the humanoid robot, which could tap into a labor market worth trillions of dollars. Don't forget full self-driving, which could become a massive, high-margin software subscription business. And, of course, there's that energy business that we already saw is growing like a weed.
And the key thing here is that bulls say this isn't just science fiction. They point to a real timeline that's happening right now. Optimus is already starting to do some work in their factories. They're planning to start building the cybercab, the actual robotaxi, in the middle of 2026. And by 2027, we could start seeing the first real robotaxi fleets on the road. For the bulls, the future is arriving faster than you think. So if this vision comes true, this is what Tesla could look like. The business completely transforms. Suddenly, making cars is only a piece of the pie, maybe not even the biggest piece. The majority of the money could come from these new high-profit businesses, like the Robotaxi network. This is the picture that bulls have in their heads, and this is what they believe justifies that $1.6 trillion price tag today. So there you have it, two completely different stories about the exact same company. One is based on today's reality, the other on tomorrow's potential. So how do you even begin to weigh these two? And what does Wall Street make of all this? Let's just put it all side by side. It's so clear. The bear case is all about what you can see and measure right now. A crazy high PE ratio, slowing car sales, and a track record of being late. The bull case? It's all about what you can't see yet, but what you believe is coming. AI, robotaxis, Optimus, and high-profit software. It really is a battle between what's real today versus what could be possible tomorrow. And no surprise, the professionals on Wall Street are completely split. Look at this. Half of them are just sitting on the fence with a hold rating. That's basically them saying, we have no idea. The other half are pretty much evenly split between telling you to buy it or sell it. You couldn't ask for a clearer picture of total disagreement. And get this, when you average out all their price predictions, you get $407. What's so interesting about that is that it's actually about 16% lower than where the stock is trading right now. So even with all the bulls, the average analyst thinks the stock should go down. That really drives home how cautious that hold rating is. So when you boil it all down, what are you left with? It's this. Buying Tesla today is not a bet on their car business. Let's be clear about that. It is a massive, high-stakes bet that Tesla will pull off some of the hardest engineering challenges in human history, and that they'll do it almost perfectly, without any major delays. That's the bet. And so we end right back where we started. You've seen the arguments from both sides, the reality versus the potential. So now the question is for you. Is that $1.6 trillion price tag a sign that this whole thing is a giant bubble? Or is it just the price you have to pay to get in on the ground floor of the future?